Alright, hello everyone. My name is Ben Decker. Doing a live stream here for the first time, so hopefully it goes well. I don't have the best internet, so hopefully things go smooth, but we'll find out here. So before I get started, I just wanted to say not responsible for any trades that you do. None of these are trade recommendations, so please be sure you know what you're doing and make your own decisions. And for this, it's just a guide of what I typically look at and what I like to go through on a trading day. So using the tastytrade platform here, I'm using kind of a test account here that actually I brought over from Robinhood. It's got a lot of crappy stock position, so that's why it looks so bad. But today SPX is down quite a bit today. Here's a chart. It's actually up off its lows. So I wanted to go through the 0 days to expiration SPX trades that I like to do. One is called an iron fly, and the other is an iron condor, or a vertical spread. So today's Thursday, so it's actually a 1 day to expiration. So I typically don't do these, but since I have off today, I wanted to make the video today. So I'm going to walk through it today. Ideally, you would set this up Friday morning, right at the market open or shortly after market open. So the credits are going to be a little bit different, as you would see tomorrow morning, and I'll kind of touch on that. So I opened SPX up here. Tomorrow, Friday, would be the 0 day expiration if it was tomorrow. Price is at 32.24. So for the iron fly, you would sell the 2 at the monies, which I'm going to go with 32.25. And typically go $50 wide. So I'll go up to 75 here, down to 75 there. And the credit here is about $32. With the VIX being at around 30, typically on a 0 days to expiration, this is going to be closer to 18 to 20. So you're getting a lot more credit with the 1 day, but also this will decay a lot slower compared to the 0 day, because we have an extra day and an extra night of risk where SPX or the market can move quite a bit. So since this is a 1 day to expiration, and I don't usually put these on, and also if you look up here, my day trade counter is at 2. This account is less than 25,000, so I'm subject to the pattern day trading rules. So what that means is you can only have 3 day trades in a 5-day rolling period. If you have 4, then they will trigger you as a pattern day trader. And if you have a margin account, then you can't trade for 90 days. You can only close out of positions for 90 days. If you have a cash account, then that doesn't apply. But I have a margin account, so I want to keep this maximum at 3. So with that, and I also don't want to babysit this trade today. With the iron fly and Tastyworks, you kind of have to be there and be watching it. So I don't want to do it in this big of a product. So I'm not going to open this trade in SPX. So 2 alternatives are the futures, which is /ES. Do the same thing. So now it's a 32.17 here, so 32.15. Go $50 out to 65 and 65. So notice that the credit is the same, but with the ES it's half the size as SPX. So if we do review and send, you can see that, well, my max profit is 1600 if I go here, even though it's 32, so that's half. And also the fees are quite a bit higher, but with this one, your max loss is only about $900. The last one was about $1,800. So this would be one where I could not watch it as closely and be okay with it. Alternatively, if you're just learning how to do this and just want to get your feet wet, this is what I would recommend. And this is what I'll go through today. So I'll actually put this in. So SPY is 10 times smaller than SPX, so it's a good way to start. So with SPY at 30 or 321.78, I'll go with 322. And since this is 10 times smaller than SPX, instead of $50 wide, we'll do $5 wide. So here we can see our max profit is 322, which is our credit, and our max loss is 178. So since this is such a smaller product, I'm going to widen the wings a little bit. And also, I should mention with the SPX trade, I typically like to try and get about 150 to 200 bucks out of it to close it. So with SPY being 10 times smaller, I'd be looking at 15 to 20 cents, which isn't really that much. So if you're just starting out with this, I would try to get 15 to 20 cents out just to get your feet wet and do well. I'm gonna set it a little bit higher, probably to 30 to 35 cents. So I'm just gonna wind this out a little bit more. So I went $8 up. So I go $8 down. Now my max loss is 414, but I'm taking about 400 bucks. So I like that a little better. So I am going to commit this here. You can see that came up. I have to give a little bit if you want to fill it right away. So I'm just going to keep petting this down until I get filled here. And I'm going to walk through. All right, 385. All right, so 385, and our shorts are at 322. So go here. Buy. So 385. Let's pull up the calculator here. So our shorts are at 322. So 322. Took in 385. So we subtract 385. Here's our break even to the downside. So in Tastyworks, you can't do a stop limit order. So instead, I'm going to set an alert. So 318.15. 318.15. I want to be alerted when it's less than create alert. I'm actually going to do 319 as well, just so I can get to my computer or my phone before it hits 318.15. So what I'll do here is if it hits 318.15, I'm going to close this buy position regardless of where I'm at. So go back to activity. So now that was the downside. Let's do the upside. So 322 plus 385, 325.85. So greater than, bad memory, 325.85. Create alert. Same thing, I'm going to do 325 as well, just so I have some time. So now I'll get alerted to my phone and my email, and the platform, there will be an alert that pops up if SPX hits these values. So I can go back and close it. So I am going to I'm going to set up a limiting close order to get my profit. So I took in 385. I want to get like 35 cents ish, so I'll set it in for 350. So I'll do 350 net debit, good till canceled, review and send. So this way, if this trade hits 350, which would be a 35 cent or $35 profit, it'll close automatically, and that'll be that. So that's my iron fly position. So the other position would be the iron condor, or you could either do vertical spread on top or bottom. So SPX is down quite a bit. So if you go to the put side, 31.40, that's about 100 points away yet. I like to go to the 10 delta for my short option. Anywhere from 5 to 10 deltas is kind of the way to go. I'll do a comparison here. So for these, I like to go $50 wide. So it's going to take close to 5,000 in buying power. Credits usually, around this amount for the 10 delta. If I move this up to the 5 delta, you'll see that it gets cut in half. So with the 5 delta, you're going to get stopped out less, but with the 10 delta, you get paid more. So it's kind of a wash, but I like to go a little bit riskier here. So 10 delta on that side. Here there's 11 or 9, I'll go 9 delta. So I went here, would be 32.40. Nope, that's only alright. So here is an iron condor. I like to do both sides. You can just pick one if you want to. If you think the market's going to go one way or the other, then you can do that. So here I'm taking in 380, 4,600 in buying power. Since this is a 1 day to expiration trade, I don't really want to put it in now because the decay is going to be slower. So let's see what we would get in ES here. So clear this out. Go up to the 10 delta, 31.40. So 30.90 would be $50 wide. Here on this side, I'll go to the 9 delta again. So 33.30, 380, which is actually, 385. So it's actually half that of 192. So here, the buying power effect is greater than the max loss. That's just futures determine the buying power reduction a little bit differently than equity. So you'll see that sometimes your max loss is actually 2,300, but you have to put up more. If you go further days to expiration, typically this isn't an issue. But with being 0 days or 1 day to expiration, this happens more often just because the brokerage thinks there's more risk in the position. So this one will be putting up $2,600 to make 190. Let's just compare SPY. If you're just getting started, SPY is a good way to go. So here, since I already used this strike, I'll go with the 9. 308 would be $5 wide, and then on this side I'll go 328 and 333. So here we're getting 36 cents. We're using $464 in buying power. So this is what I think I'm going to do for this trade, since it's a 1 day to expiration. I don't typically do these. I like to keep my risk smaller, so I'll do that. Actually, 30 cents. I take that back. I'm going to do the futures. So ES, make sure I'm going to move this up or down. One more. 10 delta. Move this up one more and one more. So 410 is actually 205. So I think it's a little better. Futures, your fees are going to be more. There's advantages using futures. The pattern day trading rules don't apply to futures. And there's the 60-40 tax advantage. So 60% of your gains are taxed long term and 40% are taxed short term. So that's, maybe it's vice versa. But that's the tax advantage there. So I'm going to put this through for the futures. Like I said, this is half the size of SPX. Trades in nickels. Same with SPX. So I'm just going to keep ticking this down until I get filled. And there we go. So, yes, 0. All right. So here, actually, I'm just going over here. Here's my position. We are in Condors for the vertical spreads. So your max loss on entry was $5,000 or $2,500 for the futures here. We don't ever want to hit that. To keep the odds in our favor, we want to set this to be 2 times your credit loss or 3x loss. So actually, what I'm going to do here, so the cost was $147.50, which, so with futures, this is double the amount, so it's going to be a little confusing. So 147.50, since everything is half the value, you double it, $295 is what you want, or that's what we got filled on. So if we want our stop to be 3 times the credit, we're looking at $885. So hopefully that makes sense. I'll go through it on the call side here as well. So close the position, $885. Ooh. All right. So there's something new. You can't do a stop loss on a future. Huh. Very interesting. All right, something new and learned just now. So, if you were to do this, I'll do it in the SPY here. So it'll be delta. Sorry, it's kind of threw me for a loop here. Should have been more prepared. So as you can tell, I don't use the futures for these positions. I only use SPX. So just to compare it with SPY, I'll open up the position here too. If I ever get filled, should get filled here. I got the 33. So now if I go to SPY, I got 2 separate orders here. So this one has 314, 320. All right, so 313 and 328 we're looking at. So token 22, we want to set a stop at 3 times this, which is 66. So that would mean that our max loss would be $44. So to do that, do a stop on it. Do this for 66 cents. If you're doing this on SPX, typically 30 to 40 cents or even 50 cents is how wide you want to go between the stop and the limit. So I'm going to go 70 cents here. basically if SPX or SPY drops and this option goes up to 66 cents, that'll trigger this limit order, and as long as this option doesn't get blown out, then this will get filled. So do that on the put side. On the call side here we took in 21. So 63 is what we want here. If I'm going too fast, let me know and I can explain this a little bit more. But there's my stop limit. And there we go. And with the Iron Condor, I want to have these expire with us, so I'm not going to put it in one order. So that's the Iron Fly and the Iron Condor. Like I said, I apologize about the futures thing. Learned something new about not having a stop limit order, so I'll have to watch this one a little bit closer. But like I said, typically I do this in SPX, and also on the morning of the expiration, not the day before. So I'm just going to look here to see what else you guys want me to go over. So Iron Fly. So the butterfly strategy. So another thing that some people like to do in SPX. I do this on occasion, I don't do it very often. But on a day like today, this is the day that I would do it, on one day to expiration. I would use a broken wing butterfly to finance butterflies on the opposite side. So if I look at here, I mean, SPX really pushed back up. What if I think tomorrow it's going to try to do it again and going to go down? So I would want to make a trade so that if it goes down, I make money. So what I could do would be to do a broken wing butterfly on the upside. And this is a broken wing butterfly. I'm not going to go into that, but that would be 70 cents at about the expected move. So then on this side, I could do a regular butterfly at the expected move. Might do something like this. So basically, I would be using the broken wing butterfly that I could sell, or I guess I'd buy, but it's buy for a credit. It's a little confusing. For some, I think it was 70-cent credit, and use that to purchase this butterfly for 50. I guess it'll probably be 60-cent debit. So net, you'll take in a 10-cent credit. And if SPX closes tomorrow at the end of the day between 31.80 and 3200, you have the possibility of making an extra $1,000. And you would make money as long as SPX stays below your broken wing butterfly break-even point. So just kind of a cool trade to do. I'm not going to do it today. Actually, why not? I'm doing this video. Alright, so I'm just going to do a $5 5x10, pretty small. You might want to widen this out too if you want to, but then your mind power and your max loss are a little bit more. So just since I'm doing this just to show, I'm going to just do a 5x10. So 5x10 here, 70 cents. Try 65. Failed at 65. So I have a broken wing butterfly here at 65 cents. So then if I do the same thing up here at the expected move, let's see how wide I can go. So I can only go 10 by 10. 10 by 10. 50 cents. Boom, fill at 50 cents. So here, just to reiterate, SPX, so I opened a broken wing butterfly for 65 cents. I used that to purchase a long butterfly at 50 cents. So my net is 15 cents. And if I can do the analysis here, we should be able to see, let's see. So here's the risk graph. So you can see as long as SPX stays below 32.70, then I'll make money. And here is the 15 cents. I can't move my cursor, but the P&L expiration 15-cent credit. So as long as SPX stays below that, I make at least 15 cents, and that's at 70 minus 55 cents. And like I said, if it lands here, make an extra $1,000. Same thing with the broken wing butterfly. If it lands here, you get an extra $500. So it's kind of a cool little trade you can do. And my max loss is 485. That's $500 minus the credit received. So kind of a shot. I don't do this very often, but if you think SPX is going to go one way or the other, you can do something like this. It's kind of a fun little thing to do. So go back to Facebook here and see if there's anything else. One person asked about approach for trading after earnings. Typically, if I'm doing an earnings trade, and there's quite a bit of earnings today, so I might do another live event tonight to do go through some earnings plays. But if I do an earnings position and I want to be in the position for a longer period of time, I'll usually go out in time. So I think Apple has earnings today. So the table here, yep, after close today. So typically what I would do here is with VIX being so high, you know, this August, if I went up to August, I won't get paid as much even if the vol collapses. It's only about a 2% vol drop here, where here it'd be a 50-cent vol drop. So if I just want to do a pure earnings play, I would do something in the weekly here, and it might be something like a $5 wide iron Condor, something like that. So this would be something I would do if I just wanted to get a pure earnings vol play, and I didn't want to be in position afterwards. But let's say I wanted to be in Apple after earnings. I would either do the August or the September. In this case, I'd probably do August. Do something like a $5 wide iron Condor here and here. And if Apple really doesn't move and I get paid, I might close it, or I can move it out to September if I want to stay in the trade, or if I really don't care about earnings and I just want to stay in the position, then I would just go out to September and do something. Here, iron Condor, just under the one standard deviation, not getting paid quite as much, so I'm going to move that in here. So the $5 wide, you want to get around 170-ish. That's what I like to do. So I would do something like this if I wanted to stay in Apple after earnings. Let's see. I think that was all the questions I had on Facebook. So hopefully this was helpful, you guys. I can do other live stream events on different topics if you guys want. Hopefully I explained things thoroughly enough. Feel free to hit the subscribe button if you want to get notified of more of my content. And I might be on tonight to go over earnings. I think Apple and Amazon and some other bigger names have earnings tonight, so maybe I'll go through my thought process for doing earnings trades. So that's all I got. So hopefully you found this beneficial. Any feedback is welcome, positive or negative. Just put something in the comments and let me know. All right, thanks guys.